Hey guys, what is up? Welcome back to my Robinhood portfolio. Hope you guys are having a great Sunday. I unfortunately have been recovering from a bike ride. As mentioned in my last video, a buddy of mine, actually a few buddies of mine, decided to go out for a ride, and we just kind of kept pushing through. It was a great day, and we ended up doing 150 kilometers, which unfortunately I am paying for today, aching all over. So just have been lounging around the house. But I suppose we need a day like that every once in a while. What I would like to talk about today is a subject I kind of broached the other day, dividend income. So currently, being a new investor here, I kind of jumped into the market, bought some high dividend yielding stocks, but also bought some bond funds on the bottom here, as well as an ETF on the top, this Vanguard ETF here. And I was kind of thinking, what's the best approach to capturing some of the dividends? I'm not fully versed in the investing arena, if you will, but I definitely want to focus on a strategy of equity stocks with high dividend yields. But there's a few different ways that can be accomplished. As I mentioned here, this Vanguard dividend yield appreciation ETF. It's got a nice dividend yield. Let's go down here at 3.156. And the nice thing about this fund is it's fully diversified. And it's somewhat managed. It's not like a mutual fund where, there's more aggressive active management, but it's a fund. It's fully diversified, and it's got a very good dividend yield. So one strategy investing would be to put the majority of my capital into this fund and kind of write it out in the long term. Wouldn't be a lot of day-to-day management. Really wouldn't even have to look at that. I would get quarterly dividend as well as hopefully getting some capital gains as well. And since it's fully diversified, I think I would be protected for the most part against market fluctuations. If there's a bear market and the market starts trending down like it did, back in 2008, I wouldn't be protected against that. But no matter what strategy I would have at that point, I wouldn't be protected either. So that would be one strategy. The next one, which would be a little bit more hands-on and, to be honest, a little bit more fun from my perspective, would be selecting stocks or securities that have very high dividend yields as well as some long-term capital appreciation potential. Things like GM here. It's a great car company, great dividend yield, 4.7, but also has some room to grow with regards to yearly capital appreciation. So these would be long-term buys here. Ford as well. Kind of cheap right now, to be honest. I think it's a great company. It's been around 4.8 dividend yield. And then we can more fully diversify with things like AT&T here. It's down a bit here, but it's a great dividend yield, 4.7%. Recently bought Coca-Cola as well. This is a company that Warren Buffett loves. I think he owns like 8% of Coca-Cola. 3.2% dividend yield. So a lot of these kind of companies would be great to have long term. Pfizer, down a bit here. I actually bought it when it was at its all-time high. But again, this is a large pharmaceutical company, large cap, 3.4%. So those would be basically buys for the long term, with the ability to kind of go in and buy and sell those individually rather than buying like an ETF. Robinhood doesn't support mutual funds, so that's why I'm not really talking about those. But buying an ETF, I'd buy it and then I'd essentially forget about it. And then every once in a while, I kind of check to see how it's doing, but it'd be giving me a dividend yield as well as some capital appreciation. Buying and selling individual securities would be a little bit more fun, especially on Robinhood with no commission trading. And then the other way of doing it would be a little bit more high risk, but buying into some bond funds down here. So I have quite a bit of capital in this Angel, Vector's Fallen Angel High Yield Bond Fund. Again, that's part of my dividend capturing strategy I mentioned in my other video. And some BlackRock funds here. I had another one that I sold, and we'll be buying in a cyclical fashion. There's some other ones here, PIMCO and whoops, I clicked on that twice. Guggenheim Fund. Very, very good dividend yields. This one here you see 11%, but this is very high risk as well. They're high yield, but they're high risk. The other two strategies with the ETFs and buying individual securities, stocks from large cap, well-known companies, it's much more safe in the long term. Buying these bond funds and also buying things like this PSEC here, which is sort of debt equity investment, as well as stag kind of REIT investments. Those are better as well for yield, but again, the risk is much higher than sort of the more conventional strategy of buying and selling large cap securities with high dividend yields, and also the ETFs. So yeah, that's kind of what I wanted to talk about today. I'm still kind of formulating what my overall strategy will be. Like I said, I jumped in, bought some high dividend yielding stocks initially, some bond funds, some ETFs, but moving forward, I didn't know what I'm going to, I don't know what I'm going to be doing, to be honest. I didn't know if the ETFs were better, if buying high yield individual securities from large cap companies is better, or buying some of these bond funds. And then also the dividend payments a little bit different as well. The ETFs and individual securities will be paying out quarterly, while some of these other higher yielding funds on the bottom here, sort of the bond funds, the REITs, some of these equity investment companies, they'll pay out monthly. So it'll be a much more immediate dividend payment that I could reinvest and play around with, rather than a quarterly payment. And also there's the fun factor as well. You know, my goal is to make some gains at the end of the day, but also I want to kind of jump in and buy and sell stocks as well. You know, I have a bunch of capital and mutual funds in an E-Trade account, but they're just sitting there and I don't really do anything with them. I check them maybe once or twice a year, and that's the end of the story. But with Robinhood here, with no commission trading, it's fun to go in and buy individual securities, kind of play the market a bit and have a little bit of fun. You know, I only have $70,000 here, so it's not the majority of my capital. It's really not that much at all. And you know, buying and selling is a fun thing to do when I have some downtime. So yeah, well, so what should I do? Do you think I should just start looking at some ETFs with good dividend appreciation, as well as capital appreciation? Should I look at individual securities, kind of pick and choose some of the higher dividend yielding ones there, with the idea that capital appreciation would be the primary goal? Or should I buy into some of these high risk bond funds, which have a monthly dividend, which I could use that to buy and sell new securities, kind of play around with? So yeah, I don't know. Let me know what you guys think. As always, give me some picks for individual securities. I'm going to be doing a video every week about that. And overall, if you like my videos, give me a thumbs up, subscribe. That really helps me out quite a bit. Leave a comment or two. And again, the whole idea of me posting these videos is to get some of your input, some viewer input. Excuse me, couldn't speak there. And kind of have a little bit of fun of ideas that you guys have, or what your investment strategy has been, or any plays that you've made that have turned out well, or on the opposite side have not turned out so well. So yeah, just let me know. So again, subscribe, leave me a thumbs up, leave me a like, and we'll see you guys next time.